Most retail traders walk up to their screens asking one question: where is the trade? They are hunters, scanning the market for prey, hoping something moves enough for them to take a shot. Professionals walk up to the screen very differently. We walk up as judges. To a professional, every potential setup is guilty until proven innocent. And in this world, the real edge isn't a secret indicator, a perfect entry, or a high win rate. The edge is filtration. Today, I'm going to show you why doing nothing is actually a high-yield professional position, and how the way pros avoid trades is what separates gamblers from masters. If you look at the statistics of a consistently profitable trader versus a struggling one, the difference usually isn't in the big winners. Both might catch the same home run trades. The difference is in the losses that never happened. A gambler looks at a sideways, choppy market and sees a challenge to overcome. A professional looks at the same market and sees a trap to avoid. We don't frame sitting on our hands as wasted time. We frame it as a profitable decision, because it preserves the fuel, your capital, for the moments when probability is actually on your side. When you lose 2% on a bad, impulsive trade, you don't just lose money, you lose the ability to take the next setup that was actually perfect. That's why professionals assume every trade is guilty first. Think of your capital as a limited resource. Every time you click buy or sell, you are hiring a setup to do a job. And if that setup has a resume full of red flags, there is no reason to hire it. Before any trade is allowed, it has to pass a filtration process. Not to find reasons to trade, but to find reasons not to. The first thing we judge is the environment. Before even looking at the chart, we check the calendar. Is there a high-impact event coming up in the next 30 to 60 minutes? CPI, the Fed, NFP? Professional liquidity steps aside during these moments. If you trade directly into major news, you're not trading a strategy, you're flipping a coin on a volatile spike. If news is close, the trade is guilty, no trade. Next, we judge price quality. Look at the candles. Is price action clean or is it noisy? Overlapping candles, random wicks, sideways movement with no follow-through? This is a meat grinder. Without momentum, your stop loss isn't protection, it's just a target for random noise. If the market is choppy, professionals don't work harder, we stay out. Then comes my favorite filter, the squint test. If you have to squint at the screen, change time frames 5 times, or draw extra lines just to make the setup look valid, it isn't there. A professional setup should hit you in the face. It should be obvious, clear, unforced. If it isn't obvious, it's guilty. After that, we do the math. Every trade is a business deal. How much am I risking and how much can I reasonably make? If you have to risk $100 to maybe make $80 because there's a major level in the way, that's not a trade, that's a bad business deal. If the risk to reward doesn't make sense, the trade doesn't happen, no exceptions. Then we zoom out. You might see a beautiful buy signal on a 5-minute chart, but if the hourly chart shows you're buying directly into a major supply zone, you're not being precise, you're being stubborn. Trading against the higher time frame is like swimming upstream. You might move a little, but the current is against you. If the bigger picture conflicts, we pass. And finally, the most important filter of all, the pilot, you. Ask yourself honestly, are you trying to make back a loss from earlier? Are you feeling desperate because you haven't taken a trade in days? Is your heart rate elevated? Are you looking for a fix? If your emotional state is compromised, you are no longer a trader, you're a gambler. And when the pilot isn't functioning properly, the plane stays on the ground. This checklist isn't there to stop you from making money, It's there to stop you from giving it back. When you realize that not trading is a conscious, active decision, you reach a completely different level of consistency. Write this filtration process down. Put it on a note next to your screen. If a trade fails even one of these filters, your job isn't to negotiate. Your job is to walk away. The market will be here tomorrow. Your capital might not be if you don't protect it. The difference between professionals and amateurs isn't how many winners they had. It's the number of bad trades they had the discipline to avoid. This week, approach the market with a guilty until proven innocent mindset and watch what happens when you stop leaking money on B-grade setups. If this helped you think like a professional, hit the like button and subscribe for more trading psychology and capital protection insights. I'll see you in the next one.